So welcome everyone to the press conference for this informal ECOFIN meeting in Copenhagen. Happy to see you all here. In a moment, the Danish Minister for Economic Affairs, Stephanie Lose, will say a few words. Oh, I wasn't on. Welcome everyone to this informal ECOFIN meeting in Copenhagen, and happy to see you all here. In a moment, the Danish Minister for Economic Affairs, Stephanie Lose, will say a few words. After that, we will have a few words from the Commissioner for Economy and Productivity and Commissioner for Implementation and Simplification, Valdis Dombrovskis, and then we will open up for questions. We will need to finish the press conference in about half an hour, so please stick to maximum one question and state your name and media. Minister Lose, please go ahead.
Thank you, and let me start by saying that I think it's been really a few good days here with colleagues, central bank governors that we've been working with over the last few days. We focused on some of the most important and urgent challenges that Europe faces. How do we strengthen our productivity and competitiveness? Here, 1 year after Draghi, there is still a lot of work to do. How can Europe play an active role to shape our future in a geopolitical landscape that is changing? And there was a clear consensus that it's challenges that are closely knit together. A stronger European and resilient economy is a precondition for Europe to play a strong geopolitical role. We've discussed four main themes relating to competitiveness as the key to prosperity and security. We talked about working methods and overviews of upcoming EU legislation to ensure burden reductions for European businesses. We talked about simpler financial regulation to make it more efficient and less costly. We talked about national structural reforms to strengthen productivity and competitiveness. And finally, we talked about policy actions to shape the future of Europe and the world in the view of the geopolitical developments. On the theme of burden reductions, of course, EU legislation poses huge benefits for all EU countries. It could be a stronger single market, it could be green transition, it could be consumer protection, but burdens on European businesses are high, and it would be nice to have a better forward-looking method and overview of what's actually on the way, so that we can act to bring down burdens. It was a theme that attracted great interest among colleagues, and we would like to continue the work to improve working methods and overview of burdens from new legislation. The aim should be to get new legislation right the first time, and then at some point, hopefully, well, this will then also be done with doing omnibuses when we get it right also in the future. The second theme on a simpler financial regulation, we all know why we have made a lot of new regulations since the financial crisis, rightfully so. We need to safeguard financial stability, we need to safeguard our consumers, consumer protection, but it's completely fair to discuss how can the sheer amount and complexity of the regulation be brought down without, as I said, giving up on the very important goals of the regulation. We will take that work forward, aiming at some common principles to the ongoing work on simplification, so that we can use that as a stepstone to build a stronger and more efficient capital market in Europe as well. We had a discussion on national structural reforms. They are at least as important as common EU initiatives. Things we do at home is being amplified by what we do together in the EU and the other way around. And we had a very good exchange of views on which national reforms are most important and how to overcome the obstacles there will always be on the road towards reforms and stronger and resilient economies. And then finally, we had a discussion on the geopolitical tension that's rising. Russia's waging a war in Europe, and the international cooperation and trade is under pressure. we have to work closely together in Europe, and we have to do it with like-minded partners to have the power to shape our own future, as well as global developments. It was a really good discussion with good friends being among us, and we are very clear that we need to work closely together, building a strong economy with strategic autonomy and a strong defence, as well as cooperating with like-minded allies outside of the European Union on, for example, free trade, climate. Yeah, this should be my remarks.
Thank you, Stephanie. Good afternoon, everyone. Today's meeting saw a broad consensus around the need for Europe to act urgently to strengthen its resilience and strategic autonomy in face of challenging geo-economic and geopolitical developments. Europe must quickly find its place in a changing world to protect its citizens and to secure its long-term prosperity. Recent violations of Union's airspace, including yesterday's outrageous violation of Estonian airspace by Russian MiGs, underlines the need and urgency for Europe to take responsibility for its own security, as well as ramping pressure on Russian aggressor. Sanctions are crippling Russia's war economy. With our 19th sanctions package published yesterday, we propose to further ramp up the pressure on aggressor. We are widening the net in area of trade, financial services, energy and sanctions evasion, and we will not rest until the aggressor is stopped. More broadly, the EU is now taking bold and necessary steps to facilitate investment needed to increase our defence capabilities, including through €150 billion SAFE instrument and activation of the National Escape Clause. We also must support Ukraine by covering its financing needs in 2026 and 2027 and help it purchase military equipment it needs to sustain its fight for survival. This is why we continue to work on reparations law. We also need to reduce our strategic dependencies, including through diversifying our trade and deepening our partnerships around the world. Here, I also would like to thank Canada, Norway, the United Kingdom and Ukraine, all represented here today, as some of the EU's most valued partners. In today's world, it's more important than ever that we deepen cooperation among like-minded nations. Finally, we must continue to take decisive action to secure our long-term prosperity by implementing the competitiveness compass and continuing to deliver on the recommendations of the Draghi report. This brings me to another important discussion we held today on how reforms in member states can strengthen the EU's overall productivity and competitiveness. Because indeed many of the levers to enhance competitiveness are in the hands of member states in areas like education and skills, labour market policies, taxation, public administration and innovation ecosystems. Reforms by member states are therefore key. The European Commission is committed to play its part in coordinating and encouraging the implementation of such reforms. And the competitiveness compass provides us a comprehensive set of actions to be urgently taken at EU level to complement member states' efforts. These meetings provided also an important opportunity to present and engage in an exchange of the key pillar of the European Union's broader competitiveness agenda, simplification. Since the beginning of the year, we have presented 6 simplification omnibus proposals, including in agriculture, defence, due diligence and sustainability reporting. These proposals will make EU rules simpler, more proportionate and easier to navigate for European businesses, resulting in annual savings of around €8.4 billion. Our overall objective is to simplify administrative procedures to reduce costs by 25% for all companies and 35% for SMEs. This means cutting around 37.5 billion euros in the annual administrative costs by the end of this Commission's mandate in 2029. Our discussions focused on the importance of monitoring the overall economic impact of the EU legislation across different policy areas, and also on how simplification can deliver a more competitive European financial sector. These discussions serve as very useful contributions to our ongoing work. So I'm grateful to the Danish presidency for facilitating these exchanges, recognizing the importance of simplification and supporting the omnibus proposals the Commission has already made. So before I finish, I wanted to once again thank the Danish presidency for your hospitality and for excellent organization of the meeting. Tusen tak.
Tak.
Thank you both. Let's go to questions. Yes, yeah. Please wait for the microphone.
Thank you. Detlef Fechtner, Börsenzeitung, German Financial Daily. To Mr. Dombrovskis, on the frozen assets, can you give us a taste of the echo of this discussion? So are there willingness to discuss, or is there even support already, or are there some caveats? And what's about the Brits, the UK?
Yes, thank you for this question. Indeed, so in these meetings I presented the broad outline of this reparation loan concept, and all in all I would say there is willingness to engage constructively, and indeed member states see it as a possible way forward. So we now obviously continue to work on all the modalities because, well, we need to prepare it all relatively quickly, as Ukraine will be needing this financing as of 2026. And indeed, we see that this reparations loan approach can be scalable at the G7 level. So we are also raising it with our G7 partners, and indeed, so I had a meeting also with Chancellor Reeves yesterday, and UK is also showing openness to consider a similar approach as the EU's approach. Klaus.
Klaus Stühr, Fagpressebureauet. That is for the Commissioner. There is a growing criticism, at least in the Danish Parliament, concerning the lack of consequence analysis in many proposals. So the outcome is far from what you thought it would be, like the CSRD. Will you improve your homework in order to avoid that simplification turns into deregulation? Okay, I think there were two parts to the question. So the first question is indeed the question on impact assessment of different legislative actions which we are proposing, and indeed we are working in European Commission to strengthen this culture, that we are providing impact assessments, that we are doing as part of impact assessments also, for example, competitiveness checks and SME tests, so seeing how the EU regulation is impacting our competitiveness. Also, I would say the paper presented by Danish presidency also puts this focus on the costs of different EU rules and regulations. So this is something which is firmly on agenda. Of course, what is worth noting that what businesses and citizens really feel is not European Commission proposals, but what comes out of the legislative process.
Therefore, we are raising it with the co-legislators, with the Council, with the European Parliament, the need also to impact assess substantial amendments which are being introduced during the legislative process, because that is the outcome which eventually concerns citizens and businesses. But on the broader point, we are indeed pursuing our simplification agenda, but we are not pursuing deregulation. So we are not moving away for our ambitious social and environmental standards. We are rather looking how to achieve our goals in a more efficient and less costly way.
And if I just may add very quickly, as the Commission is saying, it's very important that if we want to have a view not only on simplifying the stock of the EU regulation, but making sure that the new flow has a reasonable proportion between burdens and costs and benefits, then better impact assessments, as the Commission always also says, not only on the Commission proposal, but also on substantial amendments. That is vital, and it's also vital to have an overview on what's actually on the way. So we will be looking forward to working with the Commission onwards from here on that.
Let's go here in the front.
Hi, Galavotti in Kronos, Italy. It's a question for Commissioner Dombrovskis, if I may. It's slightly off topic, but since we are in an ECOFIN, because Minister Giorgetti said that Italy could lower its deficit to GDP ratio under 3% already this year. I wonder if you think that this forecast is realistic, and if yes, if Italy is bound to exit the excessive deficit procedure next year. Thank you so much.
Well, indeed. So that's what has been stated by Italy's government and by Minister Giorgetti, that they are aiming to reduce the budget deficit of Italy below 3% of GDP this year. So, and we are welcoming this ambition. And obviously, if that is going to be the case, if Italy brings budget deficit below 3% of GDP, then the excessive deficit procedure can be abrogated, and normally we would do it then. In any case, we'll be doing this assessment in a spring European semester cycle.
Let's go over here.
Thank you very much. Marta Villar from Econostream. My question is for Mr. Dombrovskis. It's also slightly off topic, if I may. So ECB Vice President De Guindos' term is up in less than a year. And I wanted to ask you about your thinking regarding gender balance on the executive board, and also finally granting new member states representation in the executive board of the European Central Bank. Thank you.
Well, as you know, European Commission has no role in selection process for the European Central Bank vice presidents or executive board members. So, respecting the ECB's independence, I will refrain from commenting this.
Paula.
Thank you. Also for Commissioner Dombrovskis, yesterday the Commission presented this sanctions package. There has been already reactions indicating that Hungary will not want to go the way suggested by the Commission. Is there a way, a plan B, by which you could seize all imports of Russian oil, which would not require unanimity? Thank you.
Well, as regards 19 sanctions package in the area of energy, it doesn't specifically deal with oil, but it deals with LNG. So basically prohibiting the import of LNG, Russian LNG into the EU, and foreseeing certain phase-out period, how it's to be done. But we also have our broader strategy to completely phase out Russian fossil fuels, including oil, where indeed right now Hungary has certain derogation from the sanctions regime, as you know. And we continue to work on this strategy, and the aim is indeed eventually completely move away and decouple from our dependency from Russian fossil fuels.
Next to Paula.
Hi, I'm Jolanda de Koster from Dutch press agency ANP. I have a question for the Commissioner. You said something about the Bruegel report. What is the next step? What are concrete actions you are going to do? Thank you. What is the follow-up?
As I was saying, the discussions we are having here on our competitiveness and simplification agenda, on our structural reforms agenda, it all, in a sense, serves as input into the Commission's work and as input for further proposals and actions we'll be preparing, and certainly can also inform certain member states' actions. So let's say that's the essence and value added of those discussions.
Yep.
Thank you very much, Marco Bresolin, Italian newspaper La Stampa. Again, a question on the reparation loan. Yesterday, President von der Leyen said that the burden should be shared collectively by EU member states, in the sense that member states will have to give guarantees for the eventually bonds that will be issued. I'm wondering whether you are looking for an unanimous support for this, or if this could work also with let's say, a sort of coalition of the willings. And in that case, for you, the question, if the Danish government is willing to participate. Thank you.
As I was mentioning before, we are currently working on all those exact modalities, because indeed one of the elements of those proposals is, as I was explaining yesterday, so basically would separate the Russia's claim on their sovereign assets from cash balances which have been accumulated from those assets, and use those cash balances to provide a reparation loan to Ukraine. But correspondingly, we would need to provide guarantees to the financial institutions on which, in a sense, how a potential liability towards those Russian sovereign assets. So that's where those guarantees come into play. So right now we have presented or outlined the concept. We expect more detailed discussions in next month's ECOFIN on this subject. I would say the first reactions of member states had been broadly positive, and many member states recognize that it is a possible way forward. But on exact modalities, this is still a work ahead of us in the coming, I would say, weeks rather than months.
And without commenting on any concrete proposals at the moment, because that's a step too early, and as the Commissioner said, we'll be returning to this in the coming month, then I can just say in general that the Danish government stands firmly and continuously behind Ukraine. We've done so since the war started, and we will continue to do so. So it will be our top priority to engage constructively with the Commission to find solutions to the financing needs of Ukraine.
Politico.
Hi, thank you. Catherine Carlson for Politico. On the financial regulation aspect, can you talk about any policies specifically that you're discussing simplifying? I mean, for instance, are you talking about loosening capital requirements for banks or reforming the scope of the SSM like the ECB's task force on simplification is talking about? Thank you.
Well, should I just say from a starting point in general, as I also said in my introductory remarks, when we are talking about simplifying financial regulation, it's not another word for loosening the financial stability, and that means that when we are talking about consumer protection, talking about capital requirements and so on, things that are at the core of financial stability, that's not the aim with simplifying. Simplifying could be looking at the different levels of the regulation. It could be looking at reporting requirements and so on. So there's a lot of different ways to approach that, and we will be looking into that, as the Commission is already doing as well. And I think that the report we had made from New Financial shows that there is a potential to address this simplification agenda.
Yeah, maybe just to complement some elements, indeed on those discussions on financial sector, I would say there was a broad agreement that actually is a post-global financial crisis regulatory and supervisory framework which we have created serves us well. It ensures resilience of our financial sector. It ensures financial stability, and this is something which obviously needs to be preserved. So that's a basic premise. But indeed, we are looking at different aspects where simplification is possible. It's also true that we have now very voluminous legislative body in the area of financial services. There are also certain overlaps and inconsistencies which we can deal with. So at the European Commission level, we are already looking at the simplification in so-called level 2 legislation. Also, Commission is now preparing a communication on the competitiveness, international competitiveness of the EU's banking sector, because we obviously also need to follow the international level playing field issues, and notably in a context how, for example, US will be implementing the finalization of Basel III framework. European Central Bank, as it was noted, is also performing its own simplification exercise for supervision, and we expect their report, if I'm not mistaken, by December this year. There's also work streams on simplification by all three European supervisory authorities, so there is lots of work ongoing, and I would say there's also lots of expectations from industry. So I think we'll be able to deliver on this simplification without undermining the fundamentals of our financial regulation and supervision.
So a few minutes left. I think we have time for one more question. No? Then thank you. Oh. And thank you for now.
Thank you.
This is Audio Channel Floor.